Hey, everybody. Today we're discussing the NatWest money laundering case and the connection to the UK government. So just before we jump in, welcome everybody. We're just waiting for some more people to arrive. We've got a number of people on the in favor. Before we get started, if you could just like this video so that we get more love from YouTube in the ranking, just hit that like, it really helps. We've had videos that have gone really, really viral just because everybody gave it a few likes. So if you're one of our regulars and you know the quality of the content that we give, please do hit that like button right now and give it a quick share while you're there if you like. The other things to discuss just before, while we're waiting for a few more people, a number of you asked me where you could get a copy of the book, Bank to the Future, Protect Your Future Before Governments Go Bust. This was the first ever published book in the world to include Bitcoin. It's in Mandarin and English, but we're giving it away free now. So rather than buying it on Amazon, if you want the hard copy as a memorabilia, you're welcome. But we'd like to get the information out there. So as when this pandemic broke out, we decided to create a membership site to help people navigate the environment where we have these record levels of crazy money printing in the Great Depression of the 2020s. So head over to retirementplanb.com/book. That's retirementplanb.com/book. And Azad has put that up on the screen as well. And Azad will also be taking your questions. So a few more things just before we get into the content. You can also get on that website, I'll give you a 4 3-part video series called The Great Depression of the 2020s, if you haven't watched that already. I've been doing lots and lots of daily tweets on Twitter where I've been giving people daily content, and you can get an update on how I'm investing in the current markets. Finally, if you'd like to get your questions answered, the way we're going to do this is we're going to cover a bit of content, and then the rest of it is where we answer your questions. Head over to, where you got in front of you is retirementplanb.com. But Slido is where you can get your questions answers. No account needed, just scan that QR code or follow the link, which I think will be in the description on YouTube. And then you can head over and we're going to be answering some of your questions. So, as I said, the main bulk of the content today is about the NatWest money laundering scandal and its connection to the UK government. So the backstory, for those of you who are not too familiar, ever since 9/11, there has been progressively more and more rules implemented in order to try and get financial institutions like banks and other financial technology companies like Bank to the Future to do a lot of the work of law enforcement by them making you your free workers, essentially. And so these anti-money laundering laws means that if you're a CEO of a financial technology company or a bank, then you have to put together a anti-money laundering policy, which means that you sign up to take about 80% of your day and your time working for free for the government to help them and support them in their goals. Now, initially, it was obviously emotionally charged when they get all these laws changed. And those changes normally happen in times of terror. So 9/11 was the catalyst for everyone opting in to remove all of their human rights in order to really support the goal of trying to implement laws to counter terrorism that came through. But over time, as the emotion wears away, it starts to become a tool and a mechanism for governments to use for things that they care about. And what do governments care about the most? Well, one of the biggest things that they care about is meeting their financial goals to increase their revenue, which is done through tax collection. And so the biggest crime that they decided was not probably terrorism in the end, it was tax evasion and not paying tax. And so really the anti-money laundering laws became the main tool used for detecting such things so that the government could end up increasing their revenue. And obviously they also have the side goal of preventing and using sanctions and all sorts of stuff in order to meet their goals and what they would like to achieve. And so as more and more of these rules come into place, the financial institutions become responsible, and law enforcement can really rely upon the financial institutions because they have to report any suspicious activity to the authorities or suffer criminal proceedings. And in the case of NatWest, NatWest has actually become one of the first companies where the regulator in the UK, the Financial Conduct Authority, is now taking criminal proceedings against NatWest. But we need to rewind a little bit to unravel it. So when I was my first job in financial services, a long time ago, way back, I think 2003 maybe, showing my age now. In 2003, I got a job as a stockbroker working for a company called TD Waterhouse. And TD Waterhouse was actually the stockbroker for NatWest and RBS stockbrokers. It was quite funny, really, because we had a relationship where we were the broker, and it's what's known as a white label. And whenever we were speaking to our clients, the clients would call through and they'd be like, "I'd like to buy some shares." And I'd say, "Hello, sir, TD Waterhouse, how can I help?" And then the buzz, whenever the phone would ring, the buzz would tell us which company we were meant to be calling from. If you were calling through TD Waterhouse, then a trade cost you approximately $20. But if you called from RBS and you were a client of RBS stockbrokers, then I'd have to answer the same call, the same people. RBS stockbrokers, can you tell me about your trade? And it will cost you about 1%, or maybe double, triple the amount, just because you called through from the other type of company. And then if you called through from NatWest, then NatWest stockbrokers, it was a different fee as well, even though we were all doing the same thing. Sorry, I digress anyway, but that helps really understand the unraveling. So NatWest Bank is a UK clearing bank, and it was later acquired by Royal Bank of Scotland, another UK clearing bank. And there's a cartel, as it were, of banks that have a direct clearing relationship with the Bank of England. And because they are clearing banks, it means that as a bank, every time you issue a loan, you get the ability to create money every time you issue a loan. So if you go into NatWest Bank or if you go into Royal Bank of Scotland and you take out a mortgage, they don't ring up grandma who's got her pension savings with NatWest Bank and say, "Can we lend some of that money to you?" As they teach in economics. They instead create a digital currency called a digital pound. And that digital pound is a digital representation of the currency that people think the government create, which is a fiat currency. And what they do is they simultaneously create what's known as an asset and a liability on the NatWest balance sheet. It's an asset because if they lend you some money and is backed by real estate or property, in the case of the UK, then they receive interest every time that you repay it, and therefore it's an asset to the bank. It's also a liability because they take the money and through double bookkeeping and double accounting, they also have a liability because if you wanted to draw upon that money, then they have to give it to you by the rules. And if they can't meet that obligation because they don't have enough deposits to meet it, then they have to do what's known as a bank bail-in, which means where they take the deposit money that you thought was yours, and they can take that money and they can just take it from your account and use it to bail in the bank. The alternative to that is they can take some of the federal deposit insurance, but in cases like the financial crisis, there's not enough insurance to cover all the deposits. The deposit insurance that you're told about with these banks doesn't cover all the funds that they're insuring. It works off the same assumption as a bank. A bank assumes that you won't want or need all your money at the same time. And if all their clients want or need their money in cold, hard cash, then you have a run on the bank, which is why the deposit insurance and the regulations later came in. but the deposit insurance works off the same assumption. They're only, insuring approximately 1% of all the liabilities that they're on the hook for. And so when you have a systemic risk event like we had in 2009, then you have the insurance no longer works. They don't want to do a bail-in because that would reputation of the bank over. And so instead, they went to the UK government and said, bail us out. And so the UK taxpayer had to foot the bill. And they paid in two forms: one, fiscal receipts of tax that comes in, and two, quantitative easing money, which is paying through a hidden tax, which later comes in the form of inflation as it dilutes the value of your savings and pushes up the price of assets, creating this huge rich-poor divide. So now we hit 2009, and we are in the situation where NatWest RBS go to the government and they say, please bail us out. And so they the central bank fires up some quantitative easing, which is a digital currency essentially that is created by the central bank. And so you have money created by Treasury, which is cash and coins. They're created in a way where if you have, for example, a £10 note, it costs approximately 3 cents to create that £10 note. And there's £9.97 margin. The Royal Mint, in the case of the UK, creates that. And the £9.97 is seigniorage income. And it goes and it reduces the amount of tax because it goes to the Treasury Department of the government. So the central bank created the money in this time. And when the central bank creates the money, it uses it to lend to the government or purchases assets or bails out. In this case, it bailed out the bank, and the UK government became a large shareholder. In fact, it bailed out to the tune of about, just getting the exact number, $46 billion in 2009. Now, $46 billion in 2009 was an astronomical number. Nowadays, we had like the big trillion number. We don't really care about billions. Billions are just play school numbers. Billions doesn't really mean anything. And we like our trillions now in terms of how much money is created. And that's what happened in 2009. So in 2009, the UK government became a major shareholder because rather than just doing it through the debt markets, they did it through the equity markets as well. I'm just going to take a quick water break. While I take that water break, if you're enjoying this content so far, hit the like button so that we can get more people share, and head over to sli.do so that you can, Slido, the link on the page, and you can ask more questions. I think in the live chat, Azad will be sharing it. Quick water break, hit the like button now. Okay, so let's fast forward to 2020 and 2021 rather. So the FCA decided that they're going to take criminal proceedings against NatWest because it turns out that NatWest had several customers, and those customers over the last 7 years were depositing approximately $365 million of what the government considers to be the proceeds of crime, which is known as money laundering. And so when people talk about the amount of crime that happens in Bitcoin and cryptocurrency, it's really, there's been many reports showing that it's a drop in the pond compared to the amount of money laundering that happens with traditional fiat currencies through banks. And it turned out that of that $365 million, $254 million of it were cash deposits. And governments around the world want to do a war on cash. They say that it's because they want to detect money laundering. And so if everyday people want to deposit cash, they look at you like you're a criminal. But if you are a criminal, this bank lets 254 million pounds, I actually think. Maybe I'm talking pounds here. I'm so used to thinking in dollars, I don't think in pounds anymore. I think it was 264 million pounds in cash come through, but they won't let you as a small business shop owner that takes cash for your chewing gum and chocolate bars deposit any of that cash without looking like a criminal. And so this is really where these money laundering laws end up. they end up with everybody having to give all of their data to all of these different financial institutions. And the people that are not committing money laundering have to put their data at risk. And they have to do all this because of these anti-money laundering laws. But those that are doing the real big money laundering, they're sticking through £265 million in cash directly at the bank. Meanwhile, in Bitcoin, there's a blockchain, and you really don't want to connect that identity to that blockchain transaction, because then you have an immutable record of the crime that you have been connected to or are committed or are committing. And then you just have to say, I've lost the keys, it wasn't mine. And then they can prove that and connect that to you. So it's completely backwards, the amount of scrutiny that they are giving to the cryptocurrency industry when this amount of money launderings happen. But that's just the nature of the world we live in today. And it's going to only get worse and worse and worse as more and more governments get broker and broker and broker. And as I covered in the book, Bank to the Future, Protect Your Future Before Governments Go Bust, which you can all get a free copy of at retirementplanb.com/book, then you will know where the outcome of this all is, and the 5 different outcomes we covered way back, right when Bitcoin started, and I published this book. So now we fast forward to where we are today. Well, this money laundering, the FCA is making a claim for money laundering against the bank and using criminal proceedings against the bank for the first time. And what does the UK government do? Well, the UK government decides that now is the right time to sell some of their shares. So the UK government dumps $591 million worth of their NatWest shares on the market that are overinflated because of quantitative easing that is being used in order to push up the asset prices. And as this money laundering investigation comes through, the UK government decide that it's now time to cash in on the proceeds of crime, and it's okay for us to do that, and we'll dump our stocks and take in some of that lovely, juicy digital currency that was created at the bank. So look at the circular flow of money here. The flow of money is that the government have decided to outsource the ability to create the pound to the private banking sector. The private banking sector then goes out and takes all sorts of risks, creates crazy financial products, creates mortgage-backed securities, creates collateralized debt obligations, creates credit default swaps, creates slices and dices, goes out, sells them all to your pension after paying ginormous commissions to broker after broker to get you deeper and deeper into debt through mis-selling credit card loans, through mis-selling real estate loans, by getting people deeper and deeper into debt through mortgages. If it all goes wrong, they just repossess the mortgage, end up with the asset. Rather than bail in, they then go to the government and say, if you print off some central bank digital currency, you can give that to us. We'll give you some shares. That will overinflate the price of the stock market. The pensioners end up with all these toxic assets. The government guarantees that system. The insurance is no longer there. And then the government uses quantitative easing as a policy in order to create the ginormous rich-poor divide, gets all the taxpayers to pay for it, gets taxpayers to also pay for it through hidden taxes, through inflation, creates this ginormous rich-poor divide. And then after overinflating the stock market, turning it into prices that are completely unreflective of the economic reality of these financial institutions and the economy, they then decide to inflate the bubble to the top of the market and dump some of their stock that were the proceeds of crime that all came through the bank as a result of these money laundering situations. And so really the hypocrisy in the entire situation, when you follow the flow of funds, just shows you the real realities of the situation that we need to work on in our banking system in order to drive this to adding some more transparency into the financial system. And people wonder why money that you can own, money that you can spend, and money that has a fixed supply like Bitcoin and they call it a Ponzi scheme, a scam, or a currency just for drug dealers, they wonder why the demand for it goes up each year. And we hit all-time highs this year during one of the craziest economies in history. So I hope you enjoyed that story. I hope you asked more questions. And now I'm going to turn over to your questions. So in order to get those questions answered, I think Azad's going to be sharing, and we'll cover as many questions as we can from the Slido board. Also, just before we jump into those, we decided to go a bit earlier than our normal 8 p.m. GMT. We decided to go 3 hours earlier because when it gets dark here, we don't get the beautiful sea background. You have to have the black dark curtain instead. And many of you have been requesting the calming effect of the lovely background of the sea. And so we had to do it in the day. And I hope you enjoy that because it's my favorite one as well. But we were doing these at the end of the day when it gets dark and all you can see is the reflection of my screen in the window. So Azad, we can move over now. Firstly, how do they easily get to Slido? Is there a hashtag they can put in sli.do, or do they have to scan that QR code?
Yeah, they can they can scan the QR code or just enter SD4, so hashtag SD4. So when you
so head over to sli.do and put in SD4, upvote other people's questions or ask your questions, and we're going to answer as many as we can in now the AMA segment. Azad, I don't think the screen's sharing. I don't know if it is sharing for you. I just see a blank screen at the moment.
Okay. 1 second. Right, let's try that. Can you see?
I can't see. I don't know if the audience can see. I just see a black screen at the moment.
So let's see. Anyone in the chat, can you guys see what's being shared on the screen right now?
If they can't, we'll just have to do questions and you read out as we go.
All right, cool. So the first question is, a lot of people are discussing a standard end of empire debt collapse. We are already seeing signs of trouble in the bond markets. Once this wall of money moves, where do you anticipate for it to go? Are there any safe assets?
Yeah, I covered exactly how I'm investing in the Great Depression of the 2020s and where I think the money goes in the 4 3-part video series at retirementplanb.com. To give you a slight overview, the way that I think about this is that you don't want to bet against the central banks in the current markets. Now, the central banks are wrestling with market participants at the moment, and the bond markets are forecasting inflation in the markets as we speak. And so that's causing central banks to come out and say, we will use all of our tools and all of our measures, but they've lost a lot of those tools. One of the tools that they've lost is interest rates. They can go to negative interest rates, but they certainly can't push interest rates up at this stage because that would turn everybody that's in debt, that took out these debts on variable loans, it would send them all bankrupt. And the people that they want to take on debt, sending them bankrupt will create systemic risk in the banking system. And therefore, it will create a deleveraging effect and a deflationary effect, which is what they're looking for. But at the same time, they don't want asset prices to fall. And so they've entered into this crazy territory. Quantitative easing is working, but the bond market is starting to factor in interest rate forecasts. People are still investing in stocks as a hedge against inflation. And they're doing that because they believe that the stock market is no longer a free market. It's a function of stimulus and how much money the governments are willing to create. And so they've only really got a couple more tools to go. And one is a complete restructuring of the financial system. And they could take it in 2 ways. One is they could drive it to more free markets, increase interest rates, deleverage all the debt, send everybody bankrupt. And they're just not going to do that. But that would be a movement towards free market economics, which has been a gradual movement away from at the moment. The more likely outcome that they're looking to take is they're going to implement more and more laws and more rules and they're going to issue a central bank digital currency when the 2009 style systemic risk event kicks in, when it exposes many of these banks' balance sheets. And I think they will use that in order to take on the banks, deleverage the economy, unwind much of the money that was created as debt and replace it with a new form of money, and then take many of those toxic assets and auction them off to the highest bidder. This means that consumers that have money at a bank won't actually lose their funds. They will just have to opt into an app, and that app will remove all of their freedoms, human rights, and liberties as they sign up and opt in for this free money. And the gateway drug is going to be the helicopter money and the checks that the government is sending out to everybody right now as their COVID relief packages. And so, oops, better not say that word, otherwise YouTube algorithms will undo all of the good likes that you have been giving us. So we better combat that. So if you give us a few more likes and a few more shares, we'll make sure that YouTube doesn't listen to those and hopefully continues to rank us. Let us know also if you actually got a notification. We've noticed that people are subscribing. If you check, hit the subscribe button, hit the bell symbol, and make sure it's checked to all, because if it's checked to all, YouTube is meant to be sending a notification to you all every time we go live. We noticed that people had subscribed before, they hadn't hit the bell symbol and all, and so therefore they weren't getting these notifications when we're going live. Okay, hope that answers the question. Next question, Azad.
Let me just try one more time. Do you see that?
That's working now for me.
Awesome. Okay, are there any new listings coming on Bank to the Future in the next 30, 60 days?
We have 5 companies under the due diligence process at the moment. So at banktothefuture.com, we allow people to purchase equity in some of the largest companies in crypto. For the first quarter of 2021, we decided to focus on a retirement plan B product for our investors. And we put them through an online coaching program, guiding them how to prepare and prep up, get their tax efficiency sorted, make sure they're doing legal processes, and investing in the different types of methodologies that I'm using. And that is, having a bet against the central bank digital or the central bank digital currency world, where the dollar continues to be the debt-based Ponzi scheme standard, and then diversifying against the debt-based standard through gold and gold portfolio, and then also betting against the massive change in the system and the banks by having a Bitcoin-based hedge as well. And I went through the 5 different investment strategies. And then we've been working to implement that with the retirement plan B customers. And then on the other side, we were focusing on our secondary market. So when you have 2 types of investments on Bank to the Future, there's new deals, which are new companies that are selling their shares. And there's the secondary market where investors want to sell some of their shares. And the volume on the secondary market's really taken an uptick, especially with companies like Coinbase that people could invest in through the platform, being floated for $100 billion, and Kraken looking to go do an IPO, and Bitfinex as well, getting through their settlement process, and many other companies. So the secondary market we were focusing on, and then doing the clients that are doing getting ready and going through the due diligence process. The due diligence process can take some time, but those can go through at any stage. As soon as that's signed off, we'll be putting those live. We like to do focus on a few deals at one time rather than doing too many as we go. So yeah, we've got some really exciting ones and some incredible second round valuation increases for those that invested in the primary markets as well. Really looking forward as our industries go more and more mainstream. Thanks for the question.
All right, we've almost got 500 viewers. Hit that like, it would really, really help with the algorithm. Okay, question from Simon Tweet. Reading 1984, a scary dystopia, but sadly many parallels can be drawn with what we see developing today. A, is the Great Reset a concern to you? B, do you think there's room for financial and personal freedom? And C, do you still believe in politics?
Let me take them one at a time. So 1984 was a book by George Orwell where they outlined what essentially communist environments are. where the government, you can't own anything, and you have really the government looking after everyone. Yes is the answer. We are moving to 1984 style economies and ways of organizing economies. It may not be as extreme. We may reach a medium. It certainly won't be a happy medium, but we're having a movement away from the free markets to a bigger and bigger government that is going to, which is certainly the trend globally, as more and more people request more support from government, because we've had this world's largest regulated debt-based Ponzi scheme that has driven more and more wealth inequality. What was the second part of the question?
Second part of the question, B, do you think there's room for financial and personal freedom?
Of course, there's room for financial and personal freedom, but you have to seek the countries that allow. There's a reason that I live on an island, because in an island, you can organizing a few thousand people means that you can totally hold your government accountable. And in fact, you actually have a good relationship with your government. On our island, I feel like when I pay tax, I'm just giving a contribution to the community, and the government is really accountable to us. They even have really, really interesting laws here where they're not allowed to take on government debt. And therefore, they have to do the good old-fashioned thing that every individual and every business has to do, which is pull in more revenue than they take on in debt. And so they actually have to spend less than they earn, invest the difference, and actually run the economy like a real economy rather than a debt-based Ponzi scheme. So if you can move to an economy that has such opportunities where the governments are actually responsible, then I still believe in the opportunity that freedom gives you, and getting that right balance and right mix between what governments are meant to be doing versus what the private sector and enterprise are meant to be doing. Part C.
And C, do you still believe in politics?
I do believe that there is a role for government. I don't think that a world without government is not a world that I necessarily want to live in. I do understand many of the arguments of free market libertarians, and even Austrian economics and the most classical die-hard economics do believe that there is a role for government and there are certain functions of government, really for example, providing a fiat currency, I don't think should be done by a private bank as it is at the moment. I don't think the government should be outsourcing money creation in to a cartel of private banks that drive everyone into debt-based decisions in order to have an economy. And so I do think that there is a role for government. You need to have more transparency in that process. But do I believe in politics? I do believe that the government was originally created as a movement against dictatorships to try and democratize and be a force against the kings and monarchy of the world. And I do think that government is a progress, but I think that governments just generally as a trend have decided that they've taken their responsibility to solving more and more problems that they shouldn't solve. And now it's had this moral hazard where everybody's looking to the government to solve all of their problems because they just can't function in today's economies and environments because of these moral hazards. And we brought up a nation of people that are being not just irresponsible with their personal finances, but also looking for the government to be fiscally irresponsible and the central bank to be monetarily irresponsible in one of the most monetarily irresponsible worlds that we'd ever seen, which is really creating a distortion in the amount of trust that people have to politicians in just this ginormous style governments that we are moving to, where everybody looks to the governments to solve everything. I think it's got completely skewed, and we certainly do need to reverse that trend. But fortunately, ways of organizing economies outside of the traditional financial system has broken the cycle. Hence a reason why in 2011 decided to start investing in the Bitcoin community and support many of the companies that were growing the innovation, bringing us to this place where we are today. Next question.
Simply, how much time do we have left to prepare? Can the money printing parabola continue on this way for a while?
In terms of do you have time to prepare? Well, the time to prepare is certainly starting now. And so I try not to make rash, panic-based financial decisions. I like to put on my rational investor perspective when I'm building my portfolio and getting prepared. Yes, anyone can start today. And unfortunately, one of the things and the goals behind my YouTube channel, and the reason I'd love for you to share it and like it and get more and more people to attend these presentations, is because we are living in the most interesting time in financial history. There is going to be a lot of change, and you can get on the right side of that and never waste a good recession, as is the phrase, or a good depression. Because you have two choices. You either go down with it or you become a force for good, take care of your personal finances, and then others can look to you for support. And that's exactly why we released the video series on retirementplanb.com for those that want to be more prepared. In terms of timing, I don't care because I'm prepared for every outcome. I've built my portfolio to survive massive inflation, massive deflation, continual bubble-based regulated Ponzi scheme, economic booms, cycles, booms and bum cycles, we'll call them, and also busts and Great Depressions. And so really, I build my portfolio to survive those so that I can stand on the side as an observer and a commentator and know that no matter what happens, I'm prepared for those. And that's what I would love for everybody to be prepared. And that's the goal behind these videos and why we would love you to help us not go from, you took us from 6,000 subscribers to 60,000 subscribers, but now we want your support to take this from 60,000 subscribers to 600,000 subscribers. So if you're enjoying this content, really appreciate your support on this channel, hitting the likes, hitting the subscribes, and making sure that we get this message out to a wider people so that we can even bring in more people and we can have much, much better conversations because unfortunately, the algorithms just love the numbers games at this stage. Next question.
Which brings us to the next question, which is a good one, I think. So there's a lot of people, we've got this whole cancel culture, isn't it? So maybe Simon, your channel is going to be next. So doing this is very brave from your part as governments are more and more comfortable with censorship and surveillance of their people. Your YouTube channel has already been targeted. What would you do if you were even more put under pressure?
Good question. So I think we need to make sure that we're hedging with, streaming our own videos somewhere else outside of YouTube. Haven't really begun on that project. I'm sure it's on Azad's to-do list as he's managing the team on what we're gonna be doing next and what we're gonna focus our energies on next. But really, I think I try to get the balance right between explaining the realities of the situation, and as long as I don't go too far off the radar, hopefully we won't be targeted too much further. But then we just start again. We look at different platforms and different mechanisms, and we'll just keep doing this for as long as we can. So the way to protect us, I think, is by having as many people and having as many voices and as many people seeing these messages as possible. I know that that's not full protection, but at least then when or if it happens, we can take everyone over to a new platform with less censorship. But I've been doing this for a long time. I wrote this book way back, started writing it in 2010. And that was after almost, a decade of studying economics, speaking to governments, and I've always tried to be open to supporting in if they ever want to understand how to switch this. I've spoken to many that want to listen about how they can adjust to the Bitcoin and their Bitcoin strategies. And so I'm here to support. I'm not here to flout conspiracy theories that may not be based upon reality. I think there's a lot to learn from conspiracy theories in some circumstances, and I think there's a lot to learn from the other side as well. And I try and get that balance in between, and hopefully we can make some change. And that's what it's all about for me. I don't want to sit here whinging about problems. I want to tell you the problems so that we can focus on solutions. And I'm proactive in that space. Nothing that I like more than speaking about solutions rather than just focusing on the problems.
A question from Phil. If fiats collapse and or governments push central banking digital currencies, is there really any hedge against that? Surely, whether it's crypto, precious metals, or property, governments will either ban or apply huge taxes to unrealized gains, forcing a sell-off.
What they tend to do is, because they've got different classifications of financial products, so they don't tend to say, we're going to ban Bitcoin. They tend to say, what is the tax? We're going to tax Bitcoin. They say, what is the tax treatment of different asset classes? And what they've been doing is they've been putting Bitcoin into an asset class. So most people, from a tax perspective, they treat Bitcoin as property. And so now so many people own it. And now products will be leased where pensions own it. And so many people, have a vested interest in this product. Governments are just much better off. Rather than banning Bitcoin, they're way better off just actually putting some of it on their balance sheet and implementing a Bitcoin strategy so that they can benefit from this wealth divide that is happening on the flip side outside of the financial system. And so a better way is to tax it, but they haven't been taxing it specifically. They've just been putting it into other financial products. And so I don't see these fears. Now, while they are fears that people have of the Bitcoin ban, it just doesn't happen. And it could happen. I'm not saying it can't happen, but there's much better strategies. So just follow the money, think about self-interest, and you can come to better conclusions. So I don't see that as something that we necessarily need to prepare for. But if it does happen, I am prepared because I have a traditional portfolio, I have a gold-based portfolio, and I have a Bitcoin-based portfolio. And I've talked on retirementplanb.com how to put those together to get the right mix so that you're prepared for any outcome. Now, central bank digital currencies are not competitors for fiat currencies. They are another form of fiat currency. They're just switching one form for another. You had paper money, and then they decided to create a digital representation. Now, in the past, governments have issued, digital currencies, and they didn't have to do it through a bank based upon debt. And central banks started doing it through QE, but then they use the debt capital markets. And so it's really just taking fiat money and turning it into the same, but more transparent, and just getting rid of the fact that you don't need to have debt in order to have an economy, and not putting it in the private banking system. And so really, it's not these huge radical, it's just maths and numbers. It's just numbers in a database. Just like Bitcoin, it's just maths and code. It's regulated by maths and code. And so is the traditional fiat money. It is just maths and digital digits in a number, and you can move those numbers into different balance sheets. And that really is financial engineering. And that can be done. So I don't see the destruction of all fiat currencies. I certainly see the destruction of some fiat currencies against other fiat currencies. But fiat currencies will always go through someone having better monetary policy or more responsible monetary policy than other governments. And so therefore you just get changes, which is why in free markets they're floated against each other. And you have these currency wars as opposed to outright bans and the destruction of all fiat money in one go. I don't see these extremes. And Bitcoin doesn't compete with fiat currency. Bitcoin gives you the ability to own your own money, spend your own money, and have a fixed supply that you can rely upon. Fiat currencies don't do that. And many people aren't using Bitcoin in order to use it as a currency, and they can use it as a currency, but they tend to be using it at this stage as a storehold of wealth, and that can then be used as a media and exchange and using account as it gets more adoption, and people are still using it as money they can own and money they can spend. So these scenarios that we create in our head, they're useful thought experiments, but all you got to do, and all I have ever done, is follow the money to come to a better conclusion.
Okay, another question from Phil. By the way, you guys can submit your questions. Just scan the QR code with your phone, or just go to the Slido website, slido.com, and in the hashtag, just put SD4. All right, the question.
All right, we'll do another 15 minutes of questions. Why don't I do shorter answers, and we'll try and do rapid fire if I can. If it's a really interesting question, I'll take it a bit longer, but I'll try and shorten them down.
Cool, let's do that. Okay, so in your 4-part video series, you talk about a retirement plan A, traditional, and a plan B, hedged against currency collapse. Is there a rule of thumb for dividing your wealth between the two portfolios? Is it as simple as 50-50?
No, it's not as simple as 50-50. So what we do with our retirement plan B clients is we give them spreadsheets where they work through all of their existing assets and liabilities and cash flows, and they come up with a personal balance sheet and a personal cash flow statement. And then they use several formulas that we provide for them to determine how much they want in different buckets. And I break it up into 4 different buckets: a security bucket, a retirement plan A, and then a retirement plan B that is designed for compounding, and then another one that's designed for fulfilling your financial freedom goals. So we use spreadsheets and formulas to calculate those specific things. But no, 50-50 is just not really a good strategy.
All right, so next question again from Phil. If fiat collapse, actually that's been answered, isn't it? That's coming.
Same one.
All right, so a question from Anonymous. What do you see happening to current and future UK public sector pensions?
So the UK pension system is a function of 2 things. One, is that they protect the fiat currency system, and they'll continue to pump funny money into stocks, so that the stock markets, the pensions, can have a wealth effect from it. The second thing is they need consumer debt to continue growing under existing monetary system. And so in order for the demand to grow in a debt-based fiat regulated Ponzi scheme, you have to have increasing levels of consumer debt in order to have an increase in expansion in the money supply. And then you have to have a wealth effect, so that people don't start defaulting on their loans. Defaults on loans is where the economy gets destroyed, because all money is debt. And so when defaults on loans happen, remember the asset and the liability on the bank's balance sheet, it disappears and the money supply contracts. And so then in a panic, the velocity of money decreases, and that's exactly a deflationary spiral is what the governments are trying to protect from, because they much rather have inflation as a hidden tax, and they much rather have that. So the pension schemes, they firstly rely upon those forces continuing, and they really mix between that. I do think that in the future there's going to be Bitcoin-based products, and they are going to be able to be put inside a pension, but it won't happen for a longer time frame. And so the future of the pension system, from me, is self-invested retirement plans, not relying upon fund managers, and using systems like Retirement Plan B in order to direct your funds in a more active and proactive approach. Government funds really are in trouble, but they will look for a bailout mechanisms for them. So if you're relying upon a state pension or a government pension, they do have to have a radical reform in order to actually sustain many of their obligations. And so I don't want to fear for you, but it's all about hedging. It's about making sure that you're not relying on one outcome, and that you hedge there. And that's what I tried to teach on that free 4-part video series. Next question.
Question from Anonymous. Hi, Simon. How is the Bank to the Future Plan B adoption coming along? How many users? How is the equity in BFT performing for those who invested in Plan B retirement?
So retirement plan B, we had to stop taking on customers at 500 for the online coaching program. So we switched it off there, and there's a ginormous wait list of people that are looking to do a next round. We haven't set that yet, but make sure you get on that list. After video 4, it will take you to a link where you can sign up on that wait list, waiting list, if you want to, and then you can get on that. Now, the next phase is we're helping them actually build their retirement plan B, and we're releasing some products at the moment to help them implement it. And so we're waiting for that until we take on the next round of customers for it. And Bank to the Future token, well, it's up over 1,000% on the year because it is a function. People use the Bank to the Future token in order to pay for their fees on the second. And more retirement plan B customers are building an equity portfolio because they want to hedge into some of their, through exchange assets, which perform well in bear and bull markets in Bitcoin. And therefore, some of them are paying their secondary market trading fees using the Bank to the Future token. So we've seen a real increase in demand for the Bank to the Future token as that network effect is building. Once we've released that product, we're really excited. Maybe later, probably later towards the end of this year or next year, releasing some additional use cases of how can reward people that have locked up their Bank to the Future tokens than just the ones that they're using at the moment. So in terms of that, it's been superseded all expectations. It just started out as this little thing of us trying to support you and help you in the current economy. And then we've turned it into a bigger and bigger thing. So we're really excited about that. So thanks for the question.
Okay, another question from Anonymous. Do you think Uniswap and other DEXs will be forced to KYC their customers in US? How do you think things will get played out?
Absolutely. So Uniswap is an awesome innovation. It's a decentralized exchange whereby you can interact with a smart contract, and a smart contract is just maths and code that performs as the contract. And it's an exchange that's built on top of the Ethereum blockchain that allows you to swap one token for another token, as long as it exists in the Ethereum smart contract, and people that want to earn funds can provide liquidity, and it's working, and it's had billions and billions of transactions. In the future, while I do predict and forecast that there will be regulatory crackdowns, in fact, we've already seen them. Look at your history, 2017, look up a decentralized exchange called Ether Delta. Ether Delta was a decentralized autonomous organization. They didn't have a company, so therefore the company didn't comply, and they didn't do KYC and AML, and therefore they were betting that the government doesn't really care about those things. Hell yeah, they care. And so they went after the person that released it and did the code, and took down the website and enforced them to either comply with the regulations or not. I do think there's going to be a genuine innovation. So one of the companies that we've invested in at Bank to the Future is a company called BlockPass, and BlockPass is doing KYC verification, where you own the data, where you control the data, and it's integrating in a lot of these blockchain protocols. So you can still have the Uniswap DEX, but where KYC is needed, it can be integrated. And I think the end result, where I see this all going, is you get smart contracts replacing more and more regulators, so that you can have lots and lots of contracts doing what took lots and lots of people before, so that you can have these models and it can be enforced within the contract. But when a technology exists, I think it's awesome, personally, that you take out financial institutions from the middle and you transact peer-to-peer, and then you put crime enforcement back to crime enforcers. What a concept, eh? Rather than financial institutions in the middle. And so I think that that's a really, really good and important innovation. But I do think that regulators will be regulators, and certainly as they look to integrate it with central bank digital currencies and all sorts of stuff in the middle, which, by the way, won't be on blockchains. Governments don't want transparency, they want control. So these things won't be on blockchains. And if they are, I think it will be just a digital representation rather than public blockchains. But yes, I do think that those eventually will have to have such protocols. And I'm investing in many of the next waves of how to do this peer-to-peer, but still not be at risk of the code and technology being shut down. But it's really interesting times on the peer-to-peer finance, decentralized finance innovation. I think it's incredible progression forward, but also buyer beware. If you can't audit those codes, you don't know what you're signing up for. And there's a lot more further to go until we fully understand the risks behind some of these smart contracts. So can't endorse that in terms of, you replace one form of risk, counterparty risk, with smart contract risk. Okay, another 4 minutes.
Okay, this is a question in relation to, there's been recent headline news about Bitcoin and the price plummeting very soon. So a question from Glenn. A few days ago, Real Vision had an interesting debate between Pomp and Mike Green. Good to get different views. Is it FUD what Green said regarding 7 billion a year could take down the Bitcoin network by mining empty blocks, etc.?
I need to understand because I didn't watch the interview. So I'd probably need to look at that. But a couple of places, I got Andreas on Bitcoin Hard Talk, Andreas Antonopoulos. Sorry, Andreas. And I got him on Bitcoin Hard Talk. And we did a whole question around don't buy Bitcoin and all these different attack vectors. But it sounds like a very technical attack vector. So I would have to understand a bit more and get some of my more technically minded team members to understand these different attack vectors. But can Bitcoin price crash? I hope so. The whole beauty of Bitcoin is that you benefit in the bull markets and you benefit in the bear markets. You really don't want to have Bitcoin going up on this upward price trajectory because the markets where people are fearful is where you get to accumulate more Bitcoin. And so accumulating more Bitcoin by following approaches like on the retirement plan B means that you really want crashes. It's those moments, unfortunately, most people only buy when it's at the top and then they get scared to buy when it's at the bottom. But the real wealth is made in the bear markets, in the crashes, and it gives these people an opportunity to do that. In terms of this full-blown technical factor, Bitcoin has been through most of them. And if there is another attack vector, then it creates an opportunity for Bitcoin to be stronger. But we've also got to stay on our toes. FUD is basically using information to scare people, specifically to meet a specific agenda, and warning on potential problems only makes Bitcoin stronger so that the Bitcoin community can figure out creative solutions on how to tackle these. But it's also one of the reasons why Bitcoin is stronger than everything else, because it's more resilient to these attack vectors than other things. And I think we've got time for one more question.
Okay. So aside from the UK government news, the viewers would be more interested in updates in Bank to the Future, Celsius Round 2, and the recent rise of the BFT token. Any comments, Simon?
Okay, yeah, if you would like updates on Bank to the Future, then head over to the Bank to the Future YouTube channel. Bank to the Future YouTube channel is where we give updates just for investors that are interested in those topics. So we can discuss the Bank to the Future token, we can discuss the upcoming pitches, and we can discuss all sorts of things there. So subscribe to that channel, and that's where I focus specifically on Bank to the Future updates. This is more generally for people that are looking to have more different types of conversations around Bitcoin banking, investing, and the economy. If you are an investor and you really want to dive deep, then Bank to the Future YouTube channel is where you can get such updates. And I'll be reinvigorating Bank to the Future live soon. And we've got some really, really great updates. We've had our head down for the last quarter, working on lots of stuff. and also some additional applications we've been making to open up Bank to the Future to a more wider audience. So more than happy to discuss those things over there. But we take here what you want. And so if you would like different types of topics, then please do suggest them. Another thing I'm doing is at the moment, I hope you notice a shift in my energy pattern, a bit of a movement away from the double chin, and the boobs are starting to look like pecs a bit, because I've been working out every day for 25 days. And the way that I've been making sure that I commit to that is for the next 90 days, I've made a public commitment to health. So if you do not follow me on Twitter at Simon Dixon Twit, I'm actually doing a daily check-in there as well, where I cover just one topic after my workout as a thank you for holding me accountable. I hold a personal belief that if you do something consistently for 90 days every day, then it becomes an addiction. And once it becomes an addiction, you can form a new habit. So I'm experimenting with that. So make sure you're following me on Twitter each and every morning on my workout. I've been going live after a decade of abusing my body, making sure that health is a top priority at the moment, each and every morning. So thank you very much for those questions. I hope you enjoyed this topic. Always remember, you are alive at one of the most interesting and exciting times in financial history. I want you to be on the right side of that change, and I want more and more people to do that. To help us do that, please do like this channel so YouTube sends us some love. Please do share it if you think other people would benefit from this. And make sure that you are a subscriber, hitting that bell symbol, hitting the all button so YouTube notifies you, and head over to Retirement Plan B, get that book and the 4 3-part video series, and all the links should be in the description. And I'll be back this time next week where we can take more of your questions, or I'll see you over on Twitter tomorrow. Azad, thanks for picking out those questions. You are alive at the most interesting and exciting time in financial history. I'll see you on the right side of that change. Peace.